The latest weekly numbers on COVID-related mortgage bailouts are out, and Diana Olick joins us right now. She's got more on that front. Diana, good morning.
Good morning. Yeah, more borrowers are now coming out of mortgage bailout plans, and the pace of that is also improving, but there are still some hurdles. Take a look at the numbers. 95,000 borrowers exited their mortgage forbearance programs in the past week. So that brings the current total to 3.6 million homeowners in COVID-19 related bailouts. That's 6.8% of all active mortgages, down from 7% the week before. Now, these plans allow borrowers to delay their monthly payments for at least 3 months, and then they can keep renewing for up to a year. Now, break it down by loan type. Those with FHA and VA loans are in the most trouble, 11% of those in forbearance. About 5% of Fannie and Freddie loans and 7% of bank and private label mortgages are in bailouts. The week's decline was primarily driven by a big drop in portfolio-held mortgage forbearances. The end of September, though, crucial to watch because just over 1 million borrower plans are still set to expire from their latest 3-month term, so we'll see how many get extended. Now, of those in bailouts now, 78% have had their terms extended since March, so still unable to get current on their payments. Back to you guys.
And Diana, just for clarity, when you're in one of these programs, does that mean you're not making any payments? You're just taking the payments that would be due and tacking them on to the end of the mortgage, the life of the mortgage?
It depends on the person. There are some people who are making some payments, some people making partial payments, and some people making no payments at all. And what happens is they can make up those payments either when they refinance the mortgage or when they sell the home. And for other programs that are not part of the government bailout, they can then tack those onto the end of the loan.
So we're at 6 months right now. You can extend these, being in these programs for up to a year. What happens 6 months from now when we're at a year and a lot of those people will have been in the program for as long as they can be?
Well, that's the big question. Do they extend it further? They can't have people not paying their mortgages forever, right? So they either go into some kind of modification plan where they get a lower interest rate and maybe they can start making their payments again. Or at some point, the house may have to be sold. And we're actually hearing from a lot of investors now that they're getting ready to buy these properties. We spoke to the CEO of American Homes for Rent on CNBC yesterday, and he said they are ready to buy up distressed homes and turn them into single-family rentals because there is just huge demand for housing right now.